It is always a great pleasure to speak to the German Finance Minister, Christian Lindner. Thank you for joining us. I mean, you're here getting down to, it's always a pleasure. You're here down to business, also speaking with the Chancellor a little bit later. But can you update us on some of your biggest worries? What should we do with commercial real estate that started in the US and actually infecting quite a lot of places in Europe and Germany?
Well, we are witnessing an adjustment period. The interest rates are much higher than expected, and so many companies are worried and have to correct expectations. I think we have to be aware of the situation, and from my perspective, for example, the ECB as European supervisor in the banking sector is aware of the situation and decides what is necessary to decide.
But, Minister, do you worry about the possible stability? I know there are a number of smaller lenders in Germany that have been through troubled waters. Again, is that commercial real estate? Is that lending practices? Like, how are German banks doing?
Well, the German banks which are involved in this business are under the supervision of the ECB. So I'm not involved in this, but from all what I have known, the market as a whole is stable, unless there is a need for new priorities and to rearrange projects due to the higher interest rates.
I know you get many questions on the German economy, and you know, in Davos you were with a bit of humor saying that, look, Germany is tired but not a sick man of Europe.
Of course, yeah.
There's a lot of questions though about the German industrialists that in the past had their glory and that now are coming down. How did that happen?
Well, Germany has some structural deficits, and these deficits had been covered by low interest rates, by demand from the global markets, and, well, the very cheap fossil energy which we imported from Russia. And now this situation has changed, and the German economy has to find a new basis. I think there is potential for a fast turnaround, given the human capital, the intellectual property, the substance of our economy. But since the circumstances have changed, we have to improve the framework conditions for our businesses, which means reforms for the labor market, which means less red tape. We need investments in the public infrastructure and the digitalization of our public administration. And of course, I think we need a reform of our corporate tax system.
But so, Minister, do you accept that, I guess, the industrial age of Germany's superpower is gone and you have to reinvent yourself?
No, look at the figures. We are still quite strong, but, well, we are in the process of transformation. Digital technologies are becoming more important. We have the challenge of decarbonization of our industrial basis, but we are doing quite well. I'm very optimistic. We are investing a lot in the green transition, and if we manage to improve the framework conditions this year, I expect an economic upturn very soon. But we have to improve the framework conditions. We have to decide for structural reforms.
Minister, we're here with a beautiful background of St. Paul's. Is there anything that Germany has learned from the UK's departure from the EU?
For us, the single market is of utmost importance, and this is why I'm strongly committed to the European Union, and so should Germany. As you are probably aware of, we have some parties in Germany, especially one, which is questioning the membership of the European Union, and a Brexit is the worst we could do, and this is why we should improve the European Union. I think it has a too strong focus on regulation and bureaucracy. But as a single market, it is indispensable for Germany and of utmost importance for our economic development.
Minister, what you're alluding to is, of course, is the far-right AfD that says basically that Germany should follow suit, and you call it Deutschland exit, so Dexit. What does that look like? Actually, what would it do to the economy if it were to happen?
It would ruin our economy, and this is why we have to tell people, okay, you maybe are not in line with government policies, but this is no reason for changing the complete system and for changing what our wealth is based on. And this is an open-minded society integrated in European partnership.
Minister, there was a lot of hope, I think, from Germany and others, that the Brexit meant that business, and certainly people from the City of London, deals could move elsewhere, maybe to Germany and especially Frankfurt. Are you disappointed that has not happened with the force that we thought it would, and why?
Oh, we have seen businesses move to Frankfurt. I think about 50 business entities have moved to Germany. And I think there is much more potential. But as I have said, the competitiveness of Germany is not as good as it could be. And this includes the financial sector. Actually, I'm preparing some new proposals how to improve the attractivity, the competitiveness of Frankfurt and Germany as a place for business, especially in the financial sector. We have already made one step. With our Future Finance Act. We have improved, for example, the ecosystem for startups. We have made it easier to be listed in Germany, and the tax surrounding for funds is now much more attractive than it had been before. So we are making progress.
I mean, so how fast can we actually see it turning? So when do you expect this to be, I guess, fully integrated to make a real difference for the city of Frankfurt?
Well, we are preparing it in the next couple of months. We have a high-ranking expert group, including banks from abroad, or representatives from banks from abroad. And I think we will have a package in the second half of this year.
Minister, the other thing that's extremely interesting is that Germany reduced its stake in Deutsche Post. Is there anything else that you want to cut or offload?
Well, Germany is following a long-term strategy. We want to reduce our share in all those companies in which there is not a federal interest to be a participant, a shareholder. And this is why we are going forward step by step. But there is no need to be fast.
But do you have a priority list? I know there's, Commerzbank, Deutsche Telekom, Uniper. There's also, how do you decide what to offload next and what kind of time frame?
Yeah, so it is a long-term strategy, and we are following it step by step. And as you know, it would not be wise to make a public announcement at the moment. There is no need for it. And these are strong companies which are successful. And the only strategy is to reduce it because there is no federal interest. And so in a social market economy, if we don't need to be shareholder, then it's better to give the shares into markets.
Minister, you'll have to come back to talk about that. But final question on of course, the constitutional borrowing limit that you're for, many economists are against.
The debt break.
Yeah, why do you think they're wrong and you're right?
Well, we are paying higher interest rates. In 2021, we served public debt with 4 billion euros a year. Now it's 36. And so we have to make decisions for priorities. We are investing on an all-time high. We are reducing the tax burden for private households and for corporates. We are investing much more, spending much more for education within the limits of our debt break, because we are paying high interest rates. And so it would not be sustainable to make higher borrowings. And the constitutional break is in the Grundgesetz, so we have no choice.
Minister, it's very nice to see you in London. What are you most looking forward to in London?
Seeing my colleague Jeremy Hunt and visiting a pub with him this evening.
There you go. Okay, thank you so much. That was the German Finance Minister, Christian Lindner, with an overview, of course, of some of the challenges and opportunities for Germany and beyond.